Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
Okay, so Scott, we have a big week of economic data. First is Jerome Powell's testimony before the Joint Economic Committee. Last time we heard from him, he sounded hawkish, even though he was easing rates. Will that continue?
I don't believe it will be, let's say, Jim, as hawkish as maybe it was before, because I believe he's accomplished something in the sense of he's dialed back market expectations a little bit. We've seen that in the steepening of the yield curve. We saw that in Fed policy as well, but he still wants to reserve, I think, some judgment as data keeps coming out.
We also have a lot of international data. Plus, domestically on Friday, we have retail sales and industrial production. When you look at the international data, do you think Powell was as dovish as he was? The easing cycle was more about the globe?
I believe it was, and I would throw in Japan GDP is in there as well as international data, Jim. And I believe that was what I kind of gave Powell that lead block to turn tail on the policy. Because remember, last December, it was a rate hike, and then it was more hikes in 2019. We saw the exact opposite because of what was going on around the globe.
Amen. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. We're going to talk about gold, GC, and we're going to talk about the micro contract, MEH. Scott.
Yeah, Jim. So GC, given this global easing cycle, and given the fact that the Fed has come around on cutting rates, you'd figure that would be this great thing for gold.
You would have thought.
Not so fast, my friend, as they say on TV, because of the fact I believe there's been some other risk-off things kind of going on maybe. And this is why I think this is a time to look at GC as maybe a way to kind of take advantage of the latest trends. So specifically, Jim, I'm looking at buying the end of month November GC gold contract, a 1425, 1400 put spread for about 1.6 ticks. But Jim, I'm cheap. I don't want to pay for this outright, so I'm going to pay for it in its entirety by selling a 1510 call. Yes, for 1.6 ticks. So this trade risks me getting short gold at 1510 if it rallies up there, but it has a max profit of 2,500 if that put spread fills out. It expires November 29th, so we got a couple weeks of data to get through, and the fact that I just believe gold looks pretty nasty right now, and therefore that put spread will get filled out.
I agree that gold looks nasty. I agree that it's probably going lower. The selling of the 1510 call worries me, but as long as somebody is comfortable of being short at 1510. Remember, gold disasters exist to the upside because something, but it hasn't in the last few years.
Haven't we seen disasters recently that have not pushed up GC?
I think this trade is probably a good trade. I would probably want to call spread, but I'm a less risky guy.
Well, thank you, Jim.
Okay, sure. I'm looking at the micros again, and guess which way I'm going to be?
Bullish?
Bullish,
wow.
Of course, because it's the same thing still exists.
And it's
a
been
dovish
working.
Fed and a pretty good economic backdrop. Okay, Scott, as an example, I'm buying the MES at 3110, the micro. So right now we're about 10 ticks below that, maybe 15. So this is one of those stop-in trades. And it's a little bit longer time horizon, too. The target is 3170 on the upside, and the stop's placed back below at 3070. Thoughts?
Don't stop till you get enough, Jim. And you've been
right.
good on that. And I like the fact on the micros, because of the low commitment of capital and the fact that you can just manage these levels, I feel, a little easier with some of the micros, especially. So therefore, that's why I like your selections
right,
today.
So this trade risks $200 to make a potential 350. You like the risk reward?
I do, and that's a fair way to kind of look at things as well as we go into some of the big data points you mentioned with respect to some volatility that's like to kick in here. But the levels you identified, I think, identify where the market could settle out.
I think this is an interesting week. Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.